Good morning, everybody. So what we're gonna do today is basically one moment here. Okay, let's just check here. So basically, what we're gonna do today is we're gonna do some back testing on USD interest rates and how it affected the zones. You know how it affects the 4 hour zones, the 1 hour zones. And how the rate change affects how the rate change really affects the candles and how price moves. So that's what we're going to backtest here. So first of all, what we need is we need to see the last 10 interest rates, interest rate decisions. So let's just bring this over here. Okay, so what we're going to do is we're going to go to forexfactory.com. First of all, that's what we're going to do. We're going to go to calendar and we shall go to December 11th was when the previous interest rates were. So we're going to simulate, try to simulate the last 10, right? So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So September 26th. So we're going to start with September 26th and then we're going to go onwards, So from September, yeah, they kept the rates the same. So we're going to start with September 26th. So we're going to go to data center. What are we doing? Gold? Gold or UJ? Gold or UJ? Let's do gold. God damn, come on, man. Man, you guys don't answer. I just want to shut down the webinar and just be like, oh, wow, I've been on mute. I've been on mute on Zoom this whole time. Okay, so basically what we're going to do is we're going to simulate the last interest rates, right? So 10 interest rate decisions that we're going to simulate here. So we're going to start with September 26th. That's what we're going to start from. September 26th, and we're going to go on forward. We're going to see how price reacted to the zones, how the rate change affected the price movement, and all that stuff. So we're going to start with September 26th. Should we do UJ or gold? I think gold is good, right? Yeah, I think gold is good. Let's start from gold. September, what was the date here? September 26th, 2018. September 26th, 2018. We can download over here. We're gonna go to new simulation over here, and we're gonna start with September 26th. 26th September. Let's start with 5,000. Not doing much. So we're gonna do 10 of these, and then we're gonna go to, yeah, let's do the leverage 500. The last 100 days. Near close. Perfect. Awesome. So we got the charts. We're going to go to the daily, add the daily. We're going to go to the 4 hour, add the 4 hour. We're going to go to the 1 hour, 30 minute, 15 minute. Awesome. All right. So this is how you do back testing, right? So we're gonna do this back testing here. What do we got? 15 minute, 30 minute, 1 hour, 4 hour. We got the daily. Okay. Perfect. Right? So what we're going to do is we're going to go towards the interest rates news. So actually we're going to change this template here to naked because, we don't need any EMAs over here. Because honestly, man, EMAs, indicators, they kind of work. I would say they kind of work. Like price will normally try to move up to the, the 800 EMA or something like that. But you know, it's not gonna be always that exact, right? So we're gonna go to 15 minute, we go to naked charts. Okay, perfect. So we're gonna go to 2 a.m. right here, right? So this is 2, 3, 4, 5. This is your London Open. London Open 3 a.m. 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 12, 1. Perfect. So this is 1. So this is 1, which means FOMC is at 2100 hours, right? 2100 hours. So we're going to go to, oh wow, look at that move. It's moving. Okay. So there's 30 minutes left, right? 30 minutes left for FOMC to happen. And we're going to, oh, actually, you know, what else we're going to do? We're going to open up a Word document and we're going to write down our back testing, right? Let me just share the proper screen for Zoom right over here. Okay, perfect. And let's just move this window here. Oh, YouTubers are here too. Oh, okay. You guys are here early. All right, perfect. So we're gonna move our document right over here, and we're gonna try to document this, and I'll show you how I documented NFP when I did that. All right. So USD interest rates. Perfect. Make it a little bigger, like this. So first we have September 26th, 2018, right? September 26th, 2018. Previous were 2, forecast is 2.25. They're trying to increase the rates, right? Increasing rates potential. Perfect. So now what we're going to do is, now if they're increasing the rates, this means that the news is going to be good for the dollar, right? So that would mean gold should hypothetically fall. Okay, so what we're going to do is we will go to the 4-hour and we will see where the 4-hour is. So the 4-hour is actually making some sort of a support right over here, right? 4-hour is making some sort of a support. And then what we have next is that the 1-hour is also at some sort of a support right here, right? So if this news comes very, very strong, what's going to happen is that you will see that it might break support, but for it to break support, we'll need to have a, like, you know, a pending order, because if it comes down, it's going to come down to this wick here to the left, you know, which makes a lot of sense. But then if you go to the 30 minute, 30 minute is also at the same support, so we're going to clone these objects here. Now on the 30 minute we have the same zones, 4-hour is at the same zone. So now when you have high volatility news, what's going to happen is that price is going to move either to the 4-hour bottom zone, or it's going to move to the 4-hour top zone, which is going to be support or resistance respectively, right? I mean, if we have a support, let's draw a support down over here, right? And then we have another zone if price moves up. And if we follow the candles moving up, maybe the first zone is going to be somewhere over here, right? And let's see how big of a range this is. So this is a, oh wow, this is a $40 range. We are in a $40 range. So yeah, I think that could make some sense here. So let's try to see what we can do. Let's go to the 1-hour and let's try to play it. Let's try to see where price goes. So move it faster a little bit. So it's really important to see where price is going to actually close, because that close is going to give you much more information. So our first target is going to be, like, if it comes down to break support, it should break this area, right? So if it's going to break that area, what we're going to do is we're going to put a sell stop. We're going to put a sell stop below support, which is going to be almost 20 pips away. Pending distance 20 pips. Percentage, let's do 2%. Stop loss 20 pips. Sell stop. Oh, this is not good. Should be 200. 200. So the analysis is that if it breaks this it should continue moving down to this area here. Right? Because the news is supposed to be good. So let's see what happens. But if for some reason price does not stay below the support, then there's a very high chance the price is going to come back up towards, this area right over here, I'd say. Oh, here's the news. News comes in. Price is reaching. So notice how price now reached this 4-hour zone here, which we drew, because this is a high time frame zone. So if the news is going to be good, so let's take a look at the news here, right? So okay, so news is good. They raised the rates. They raised the rates. So this possibly means that now price grabbed liquidity, because if price is going to break down, this move up is going to be a grab of liquidity. So it's maybe grabbing liquidity to continue moving down, because now it's okay. The move is like they've raised the rates. It's good for the dollar. It was as forecasted, so there's a potential it can continue moving down. And that was just a liquidity grab. See, gold does these moves over here. So even if you take a sell, I mean, it should be good. It's just retracing a little higher. If you look on the 4-hour, oh wow. Well, that's a lot of liquidity it's grabbing. Let's take a look on the daily here. Ooh, daily is still ranging. Daily is still ranging. It's rejecting that area. It's really not trying to break above it. You see the time? This is only 11 minutes right now. 11 minutes have passed, 12 minutes have passed, speed it up a little bit, and we're going to come to the 15-minute close. This is the 15-minute close. This is the 30-minute. You have the same zone on the 30-minute, right over here. On the 1-hour as well, this candle is about to close. The 30-minute candle is about to close. It's closing below that zone, which makes sense. The 1-hour is still here. And this is a strong support. So now, as eventually the news starts to get absorbed into the market, and now the real move is going to start probably. And there we go. It's moving. And once that support breaks, first target is going to be down over here. Or even you can move your sell stop right up over here too. See if you can move it. Right here. Because if that wick breaks, bottom of that area, that's the low of the 1-hour. If that breaks, then there's a very high chance for continuing moving down. Oh, there we go. We move down. Oh, wow. That's a big move. Okay, perfect. Close it. See, now, this was a spike down. So when price is moving down, you're looking left. You're like, okay, the last time price rejected that area was on the 21st September. So if it rejected that before, what are the chances it's going to reject that again? So I think there was a very high chance it rejected it. Let's see what happens in the next candle. And the next candle, oh wow, full rejection. Perfect. See, so now this was the 26th September. Increasing rates. Rates increased. Rates increased. Price went to 4-hour resistance. Fell below support. Then ranged. Perfect. It just ranged. It's just ranging. See, we have 2 hours passed now and it's still ranging. So that was the 26th September interest rate. So now we're going to go to the next one. Oh, okay. So the next one is going to be on the November 8th. So we're going to go to November 8th. Right? October. Let's look at the daily candles here. Oh, wow, look at that. Look at that daily candles moving. 2, 5, 6. Oh. 7. Is this FOMC? Where is FOMC? I think this was FOMC. No, no, no. Here it is. Federal funds rate 8.11 7 8. Okay, perfect. So we are here. 3, 4, 5, 6, 7, 8. So this is London Open. 3 a.m. 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 1. 1 p.m. 1 p.m. and funds rate are in 1 hour. So we are at the second fund rates, and what the projection is over here, projection is that they're keeping the rates the same, right? So if they're keeping the rates the same, you really have to ask yourself that what's that's going to do to gold if they're keeping the rates the same. So now if they keep the rates the same, there's a very, very high chance that price might, like, that's good for the dollar, right? Because if the rates come as expected, that's good for a dollar, and that should kind of, like, drop gold if we have moved. But then again, gold is ranging right now, because now when we look at the charts on the 1 hour chart, what we're going to see is that we have a support down over here, and we have a resistance up over here. So if we zooming in is very important. So you see the 1 hour candles. 1 hour candles are rejecting up over here, the most recent ones, 1, 2, 3, right? These are rejecting 1224. Can you imagine prices at 1224? Now it's at 15 something. And then they're rejecting down here at 1221, right? So if you go to the 4 hour, 4 hour will make sense too, because now on the 4 hour chart, you have a support being formed down over here. And then you have a resistance formed up over here. So let's suppose there was no news, right? Let's suppose there was no news. Now, I want some sort of interaction here. If there was no news, and if you looked at this candle right over here, would you expect the next candle to break support and go down, or would you expect the next candle to kind of like make a retracement and go up and fill this wick? If there was no news, oh, Monty said down, break support. Yeah, I think most of them said up, right? If there was no news, because I'll say why. I think the reason why you guys said up is because, the previous one was bearish, this one is bullish. It broke the high of the previous one and closed bullish, right? So if we wait till the news, now this is the new 4 hour candle just starting, right, with this hour, and this is 1 hour right before the news. It's just starting. See, in 15 minutes, 16 minutes, it has just gone up. That's coming down. Wow. Okay. So this is the 1 hour candle right now. This is the 1 hour candle right now, and what are the predictions of what's going to happen right now? We don't know, because they're keeping the rates the same. We're at resistance. I mean, they're keeping the rates the same. If they're keeping the rates the same, price should drop, because if that's going to be as expected, there should be a drop in price. So now if you're looking for a drop in price, inverted head and shoulders, I don't see any inverted head and shoulders. If there's going to be a drop in price, so now having a sell stop below the previous 1 hour candle would be much better, because if the news is the same and price drops and it breaks the low of the 1 hour candle, then there's a room to go further down, and to potentially fill this wick right here to like 30 pips, right? If that low is broken, or eventually, also come down till here, like around 1221 or 1221.40, right? So I think a sell stop below here would be perfect, which is like 12 pips away. So we're going to go to pendings, and we're going to go and put a sell stop. Stop loss is going to be the same, 1-to-1 risk reward. So we're going to put a sell stop down over here, and we're going to see what happens, because if price breaks up, can't put a buy stop, because I mean, all this region here, where's my pen? because all this region here, this region here, this is a rejection area. So you would need a buy stop up over here around, 1226. That's where you'll need a buy stop, because this is a rejection area. And if you have a buy stop here, I mean, price can just come up and reject and come down, right? So that's why we're not going to use buy stop. So let's see what happens here. We have 4 minutes, 3 minutes, and boom. Okay, there you go. Let's move up. It's coming down to this area. Oh, wow, moving up nice. And let's check what the news was. News was as expected. So maybe this is a liquidity grab for a continued move down. It has broken the low of the 1 hour candle. Oh, got stopped out. Interesting. Yeah. See, so this should also be a like this simulation should also be an educational one where you don't have to trade news. So let me just post the link here. Someone else wants the link. Okay, David should be ready in 34 minutes. Yeah. See, now it's still in a range. Like, it's still ranging. There's nothing you can do. The 1 hour is about to close and we're still ranging. Even if you forward the candles here, still ranging. Right? So not all high volatile news is going to be like really high volatile. So we're going to write down here, what was this, 8th November? 8th November 2018. Rates stayed same. Price ranged. Price just ranged, right? All right. So let's go to the next one here. All right. So see, I don't have any other windows open. There's no other windows open. Okay, December 19th. So we're gonna go to December 19th. Oh wow, things move really fast, eh? Like after the rates, price moves really quick. Really quick. Okay, December 19th. Monday, Tuesday, Wednesday, Thursday. 19th. All right, there we go. We got December 19th. We have fund rates at 2100 hours. So we're going to move to the fund rates here, 2100 hours. So this is 3 a.m., 4, 5, 6, 7, 8, 9, 10, 11, 12. Oh, wow, what a move up. Fund rates. So they are increasing the rates once again at 2100 hours. They're increasing the rates. Perfect. So here we have the 4-hour chart. They are increasing the rates. First of all, what we see here is that we have a zone right here. There's a zone here. The 4-hour broke, right? And then there is a support down over here, right? We have a support. So now what we're going to do is we're going to copy these zones right here and right here. We're going to copy this zone, clone them on the 1 hour, right? So now 1 hour basically broke this resistance, went up, created some sort of a rejection, and now it's starting to come down. And right over here, so now they're increasing the rates. So now when they're increasing the rates, two things are going to happen. Either price is going to break below 1250 and come down to 1247, or they increase the rates, price can just start to continue the uptrend here. And if it starts to continue the uptrend, and if we look left, we see that it already tapped into this area right over here, and there's a chance it can just try to retrace back in that area. So what we're going to do is we're going to try not to be very, very hasty in this decision. So what we're going to do is we're going to wait to see how this candle closes, because once we get a close below 1250, it's coming down to 1247. I mean, it's just going to come down to 1247. So we're going to see what happens here. So we're going to let this close. So actually what we're going to do is we're going to write down here. We're going to bring our Word document up, and we're going to write down here 19th December 2019, rates being increased. Rates being increased. So if the rates are being increased, maybe this move up on gold was just a, you know, pricing in the rate increase. December 18 or 29. December, oh yeah, December 2018. Yeah, sorry. Man, you guys have good analysis on my typing skills there. Oh, rates being increased. So, okay, so what we're going to do is we're going to go straight forward to this part here, and we shall go to the very end. So now, if price is creating lower highs and lower lows on the 1 hour chart, if there's a rejection at this point, what's going to happen is price is just going to go up if there's a rejection at this point, right? And if there is no rejection, so here's the thing. If there's a rejection and the next candle breaks the high of the previous 1 hour candle, right, then there's going to be a continued move up. Because once the high is broken, there's a high chance price is going to make higher highs and higher lows. Makes sense? But at the same time, if price breaks below the low of the 1 hour candle, that would mean price is going to make lower highs and lower lows, and then there's a higher chance for price to come down to the support here at 1247. Right? So maybe that's a good idea to have a sell stop down over here around 17 pips away. So we're going to put a sell stop at 17 pips away. Sell stop right over here. Oh, this should also be 17 pips because 1 to 1, right? Sell stop here. And then what we're going to do is we're going to put a buy stop around 23 pips away. 23 pips away, 23 pips away. Now notice I'm using the same risk, right? It's the same risk. There's nothing changed. It's the same risk. No big deal, right? And then we're going to continue on. If you look on the 4 hour, the 4 hour just formed. So, it seems like 4 hour can go bullish, but that's why we have a buy stop, but the 1 hour is because the small time frames are going to create the overall higher time frames, right? If the 1 hour breaks the low, then it's going to continue down. If the 1 hour breaks the high, it's going to continue going up. So we're going to wait and see. Oh, low has been broken. It's coming down. It's moving further down. Oh, we are up 10, 5, 6 pips. We are up 140 pips, 70 pips. Oh, nice. Oh, it's dropping. Close the buy stop, close the sell stop here. Maybe, close like partials, whatever. Because if the rate has been changed, it's been increased. Let's take a look at the rate change here. We're going to go to news. They have increased the rates. Price came down, broke support, secured positions somewhere, and now stops are at break even. So this was good. It played out. Oh, break even one has been stopped out. Perfect. Rate increase. Pendings based on 1 hour close. We talked about these pendings. So what you can do is you can just, once it's recorded and uploaded, you can just go watch the recap. Right? Let's see what the YouTubers are saying here. Oh, YouTubers are still running. Okay. So in 30 minutes, we're gonna have David here. He's gonna talk about futures and options, like basics of futures and options. Like I know some people are interested in futures. So, I also know that you can use futures to hedge your currency positions. I don't know how that works. So David's probably gonna talk about that in more detail too. So perfect. This worked. They increased the rates. So it was good. Let's go to the next one. So let's go to the next rate change, which is on January 30th. So we're going to go to January 30th here. So let's see if it falls more. Oh, nothing. Okay, January 30th. There we go. We got January 30th. So we're going to go to the 1 hour chart. And we're going to go to our time. This is 3 a.m., 4, 5, 6, 7, 8, 9, 10, 11. Okay, start sneezing there. 2100 hours. So we're gonna go to 2100 hours here and 2019. Okay, perfect. Awesome. So January 30th. So we're gonna look at the news here. So now they're expecting to keep the rates the same, right? Now let's go to the daily here. Oh wow, daily is all the way up. Daily is all the way up. January. It's kind of like this January, because in January we've had a very very like strong moves up too. But those are all like fundamental tensions. That's why we had to move up. Okay, so we're going to draw our zones here, our most recent zones. That's our resistance. We have a support down over here. We're going to go to the 4-hour chart. 4-hour basically seems like what the 4-hour is doing. It created some sort of a liquidity area down over here. So now these liquidity areas are areas where price has the potential to come into, right? If there's a spike. If there's a spike, there's a potential price going to come into this liquidity area. So now we have one liquidity, like a support area over here. So now what we need is a resistance area, which is going to be right up over here, right? So since we got that, so we're going to look at the 1-hour chart. This is the 1-hour chart. So now from the 1-hour chart, what we can see is that maybe this is our support down over here. That's the same liquidity area from the 4-hour, right? And then we have, I think this is oh, okay, we can zoom in more. Yeah, so looking at the 1-hour, this is a minor support down over here. So we're going to keep this liquidity area in mind, and we're going to look at this minor support, right? And let's see where price closes. This will be interesting. Because if price rejects this area, and okay, so now if we look at news and they're keeping the rates the same, right? If they're keeping the rates the same, if we're going to use pending orders, I think a pending sell stop below this low is going to work, and a pending buy stop, maybe up over here is going to work above the high of the 1-hour candle, just like the same we did for the last one. Oh, actually, let's do this. So we had a win over here, right? We had a loss over here, and we had a win over here. So now we have 30th January, 30th Jan 2019, rates kept the same. So we're only using what's it called? We're only using price action. That's it, right? So if whatever the news comes, if the next candle breaks the low of the 1-hour candle, there's a high chance it's coming down to, this 4-hour liquidity area. So what we're going to do is we're going to put a sell stop here around 17 pips away. Pending sell stops. Let's put 175. And we're going to use 175 here as well. So we got a sell stop right down over here, and we're going to use a buy stop somewhere over here, which is going to be around 175, same stuff, buy stop. I think this stop loss is not right. Right? Yeah, I don't think this stop loss is right. We're going to put it right over here, and we're going to put a sell stop over here. Okay, makes sense. Perfect. Oh, there we go. News is here, boys. Oh, we're moving up. So, see, we moved up right over here. So what we're going to do is, we're not going to be hasty, right? Because you have to be very, very vigilant of what's happening. Take profits, break even, and let it run. That's like the best thing that you can do. Securing positions is the best thing you can do for yourself. See, secured positions, now no problem. No problem, big man. See, now we got up even higher. So what I'm going to do is, where's my calculator? So I'm going to close half over here. Can I close half here? Close half. Does it work over here? No, it doesn't work over here. Okay, so we're gonna close half over here. We're gonna do this. We're gonna go over here, 0.09. Perfect. Closed half. Let the rest run. See, 34, 43 pips. Oh wow, no problem. Close this here too. Perfect. The best thing, the first thing we did here was to secure profits. We secured profits, and then the rest just ran. Right? Perfect. So this was a win here as well. Kept the rates the same. Rates kept the same. Pending orders based on 1 hour. This is a win too. So now we're going to go to the next interest rates. Let's go over here. March 20th. We'll go to March 20th. Oh wow, see, moved up higher. March 20th. 1920. Okay, we're at March 20th. We're going to go to the 1 hour chart now, and we're going to go to our interest rates time. This is 3 a.m. 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. And the rates are in 2100 hours. They are keeping the rates the same once again. 2100 hours. Okay. All right. So this is a 4 hour chart. 4 hour chart now. If we start drawing it again, what we're going to find is that we have a support down over here. See, we're at 1300 now. 1300 in 2019, you know, and we're at 1500 right now. We tapped 1600, man. Crazy. Crazy. God damn. And then we got a resistance right over here. So this is the perfect scenario, right? This is the perfect scenario because if price bounces out off from, you know, like 1300 or 1298, we're going up, back up. You know, but if we break that low, what's going to happen is we're going to come all the way down over here. So now we got zones. So we're going to clone all these zones. Clone them just like this. And that's it. And now what we got to do is we just have to wait for the news. So we're going to go to the 1 hour chart. And that's it. We're just going to wait right now. We're going to see how this chart forms, what happens. We have to see how this candle closes. That's the thing. Because if they are keeping the rates the same, we should break support, right? So let's move to the next one. 45. All right. There we go. There we go. We got 30 minutes like this. Seems like we're trying to reject support. Uh-oh. We got 5 more minutes left. 5 minutes left here, boys. Okay, 2 minutes left. Okay, perfect. So now, looking at the 4 hour, if the 4 hour breaks this low here, actually let's look at the daily here. Daily is bearish. Daily looks like it can fall, man, because they're keeping the rates the same. And if the rates are kept the same now, usually when the rates are kept the same, it's good for the dollar. So price should drop, right? Because news is coming out as expected. Now, if it's going to break the low, it should, I mean, okay, let's use the same strategy we used before, right? So let's go to March 20th, 2019. Rates kept the same. So we're going to use the same strategy. Stops below the 1 hour low over here, which is like 16 pips away, right? Pendings. 16 pips away. We're going to use 160 over here too. We're going to use a sell stop and then maybe a buy stop above the high, which is like, fuck, man, it's not that far away. Let's put it like 10 pips. Give it a little room here. Yeah. All right. Perfect. Oh, actually, might want to bring it down a little bit. Maybe right down over here. Okay, perfect. So we got a sell stop below the low of the 1 hour candle, because if the next candle breaks the low of the 1 hour candle, it should at least come down over here. And if, you know, if it's really good, we should continue moving down to that zone over there. But But if price does not break the low and breaks the high, then we should continue up to the next zone over here, which is like 50 pips away. So let's see what happens here. We got 2 minutes left. Oh, wow. Okay. We're moving up. So see, we're moving up over here. Okay, 27 pips. So we're going to close partials. Partial positions right over here. Close them, put stops at break even, and, you know, remove the sell stop, and there we go. This was the same strategy thing that worked, you know. And look at the 4 hour now. We're at the zone. 4 hours about to break the high of the previous. Oh, it broke the high of the previous 4 hour. Oh, this is running. So close everything probably right over here. Alright, so we're gonna go to our document over here. Same strategy, pending orders. My spelling is not the best. Spelling orders, pending orders, above, below 1 hour candle. So see now we've done what? 1, 2, 3, 4, 5 interest rates. We've done 5 interest rates, and out of those 5, we won 1, 2, 3, 4. We won 4, right? And on the last 2, we used the same strategy with pending orders above and below, you know, the 1 hour candle. So now we're going to go to the next one, May 1st. We're going to go to May 1st over here, and we're going to try to use the same principles, right? So now we're trying to get somewhere. May 1st, was it? May 1st? May 1st. Okay. All right, we're going to go to May 1st. Tuesday, Wednesday. All right. We are at May 1st. We're going to go to the 1 hour. We're going to pause this, and we're going to go 1, 2, 3, 4, 5. 3 a.m. 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Check the news. We got 2100 hours. We got news at 2100 hours. So we're going to go to 15-minute chart, and we're going to see what happens here. Right? And now what we're going to do is we're going to do the same thing as we did before, which is that we will try to draw the zones on the 1 hour and the 4 hour charts, right? So let's pause this here. Let's go to the 4 hour. Now, it's the same thing here, right? On the 4 hour chart. On the 4 hour chart, what we first do is we draw our 4 hour zone, which is around maybe, you know, you see this wick over here, which came to the top. So maybe this is the range right over here, the 4 hour chart, right? And then we have another one down over here. So we got these 2 ranges now, right? So when we copy this on the 1 hour, we're going to see some more information here. One moment, go to the 1 hour, and there we go. We have some more information here. Perfect. So now what we do is we let it play. Actually, we let it go to the 15. There you go. 45 minutes left. 15 minutes left. Perfect. See, we're ranging. The bigger the range, the bigger the move. Just know that. Okay? Just know that. The bigger the range, the bigger the move. Same thing here. What we're going to do is we're going to put a sell stop below the low, which is like 20 pips away. Man, I'm getting good at this now. We're getting good, man. We are getting good. We're going to put a sell stop. Oh, what? Wow. 38 pips. 38 pips spread. God damn. Wait. This is not a sell stop. Oh, this is a sell limit. Alright, sell stop down over here, and we're going to put a buy stop. Almost 17 pips away. 17 pips away, we're going to put the buy stop. Buy stop. Okay, perfect. We're good to go? Good to go. Ooh. Oh, buy stop activated. Buy stop stopped out. Yeah. You know, we tried. Didn't work. Now it's going up. Oh, let's check the news here. So they've kept the rates the same. If they have kept the rates the same, if they're keeping the rates the same, 4 hour, if it's rejecting the area, because remember the last one, it just fell down, right? Because it kept the rates the same, gold fell. So maybe this is just grabbing liquidity. if it's grabbing liquidity, and if the 1 hour has created a low over here, and if the 1 hour has only moved up, and if it's grabbing liquidity for a move down, then once this low is broken, we should continue moving down to this area. So let's see here. We're only 5 minutes away. Let's zoom out here a little bit. We're moving up. We're moving deeper in that zone. In the jungles of Serengeti, the prey moves deeper in the savannas. In the savannas. Yeah, because if that low gets broken, then we're coming down. So let's see here. We're going to give it... Usually there's a press conference soon in 15 minutes. We're going to wait for that. Maybe move it a little faster. The 15 minute is about to close. Because if this low gets broken, we're coming down to, you know, like 1277. Oh man, it's just taking... Wow, still heading up here. Yeah, sell limit would have been... I mean, it stopped us out first, so... I guess that's the way the cookie crumbles. We have press conference in 10 minutes, 5 minutes. Let's just see what the next candle does without wasting much time. Oh, this is the press conference now starting. Oh, wow. Okay, so we're not even going to count this. So this was the press conference. See what happens here. You have to see it in slow motion. This is a 15 minute. It's coming down. It's hard. Let's look at the 4 hour here. Yeah, welcome to gold, man. 1 hour broke the low of the previous 1 hour and it activated the position over there and it came down. It's slowly coming down to this here at 1278. Damn, yeah, it really fell. Okay, we know it fell. All right, so this was the May 1st, 2019. Rates kept the same. Same strategy. Loss. You know. But then there was a win with the sells. So far, we're not really sure that it works 100%, right? So we're going to do one more. Actually, we have 10 minutes left, so we can actually do one more. How many we've done so far? 1, 2, 3, 4, 5, 6. Oh, we've only done 6. Okay, so we're going to do another one here, June 19th. We're going to go to June 19th here. Alright, so we have some intrusion over here. Okay. June 19th. Oh wow, look at that, moves of gold. This is just a daily here. 12, 13, 18, 19. Perfect. This is 3 a.m., 4, 5, 6, 7, 8, 9, 10, 11. Let's look at the news, 2100 hours. 1920. Perfect. So we are at June 19th over here. So what we're going to do is the same thing here, right? We're going to draw, let's go to the 4 hour. 4 hours at resistance, 4 hours creating support right down over here. And then we have a resistance being formed in the 4 hour right up over here, right? So if we clone, what we're going to find is on the 1 hour, we have the support and we have the resistance right up over here. So basically what we're going to do is we want to see how this candle closes, because the close of this candle is going to give us some more information. So let's see what happens. Oh, pause it. 30:45. All right. Let's just make sure I'm not on mute. Okay, no. All right, so we got 8 minutes left over here. 5, 6, 7, 8. Okay, perfect. So what we're gonna do here again is that we're gonna apply the same principle that we're gonna use the pending order, like a buy stop up over here, which is like 16 pips away, right over here, and right over here. We're gonna put a buy stop, and then we're gonna put a sell stop down below the low, which is around 15 pips away, right? So we're gonna use 15 pips away right over here. Okay, just one sec. Okay, let's play this and see what happens. So now we're using the same strategy. Well, it's not a strategy, but like the same logical methodology here. It's left. Oh, nice. Broke up. Perfect. It worked again. Okay, so we're going to close this. Close maybe 0.5. Put stops at break even. Remove the sell stop. And there we go. So now we're going to go back to our notes. And we're going to write down. Oh, actually, what was the news here? Oh, yeah, they kept the rates the same. Right? They kept the rates the same, so it's not always certain that price is going to do what it did before, because news events, they are random news events. We're tapping into the zone. So now, since price is tapping into this zone here, you see there's resistance here, price rejected some areas over here. So what we're going to do is we're going to close partials more, right? And now we have a runner, and this runner can run wherever it wants to run. So we're going to go here now again, and we're going to write June 19th June 2019. Rates kept the same. Used pendings above and below the 1 hour candle. And this is also a win, right? So how many have we done? 1, 2, 3, 4, 5, 6, 7. We've back tested 7 interest rates, and out of those 7 interest rates, I would say, let's say 2 were losses. Like there was one loss right over here. We had a loss. Where's our Zoom thing over here? We have a Zoom thing over here. So we had a loss over here, and we had a loss over here, and the rest we had wins over here. Right? This was recorded. You can review. Oh, someone's calling me here. So you can review it later on, right? You can listen to the things we talked about. This was all based on price action, right? Price action, where the zones are, where the rejection zones are, how if price is going to continue moving up, it's going to make higher highs and higher lows and vice versa. So I hope this was helpful and some sort of educational. I wanted to do half an hour of this, but there was a lot of stuff going on, so we had to extend it. It's almost 10 a.m. right now, so what I'm going to do is I'm going to invite David. If David is here, I'm going to try to see if I can unmute David here. Let's see. Oh, it is. Hey, David.
Hey, Rakeel, good morning. How are you?
Hey, good morning, man. Good. How are you?
I'm doing great this morning.
Oh,
Awesome working.
awesome. Perfect. So, yeah, I'm just gonna let David take on from here, and
Okay.
seems like
Can
David
you
has some things planned. So let's do this. Yeah. So basically, you'll have to share your screen.
let me do that right now.
Okay.
Share my screen. How's everybody doing? Good morning, everyone. First of all, I want to thank Rakeel for the opportunity of coming on and just showing you guys basically the futures market and how futures work. So the first thing that I want to do is I want to explain um, basically what futures are. Okay. On this platform here, I assume, can everybody see my screen share? Everybody can see it. Um, okay, perfect. All right, perfect. So that's the platform that I utilize, and I'm going to go over a little bit here. I'm not going to take much of your time. We'll probably do about 30 minutes today, and as time goes on, I'll keep introducing you more and more into futures and what futures market and options are all about. So the first thing I want to talk about is what a futures contract is. And I'm going to bring this up here. And a futures contract, basically what it is an agreement right here. It's two parties that transact a futures contract. So it's an agreement to buy something at a later date. Okay. And usually a broker house is a clearing house. It's in the middle between party A and party B. So in the futures market, we usually trade 3 months out. You can trade 6 months out. You can trade 12 months out. But the liquidity in the market is usually when in the about 3 months out. Okay. So I'm going to give you an example of how a futures contract is implemented. So, for example, you have a farmer who farms coffee. Okay. And he's going to Walmart and he's going to sell him his bundles of coffee. So Walmart's going to say, listen, I'm going to buy your bundles for the year of 2021 and 2022 at $3 a bundle. Now, what happens to the farmer is good for him because he gets cash flow in right away and he has his everything sold for the next 2 years. Here's the risk that the farmer takes. The risk that the farmer takes is that he has a really, really good year and he could have actually sold his bundles for $5, $8. So he's giving up that extra profit for cash flow today. And the risk that Walmart, in the example, would take is that the farmer has a really bad crop year and he now cannot deliver the exact amount of bundles that he would have for $3. So he's going to buy the coffee at a more expensive price than what he would have if he would have bought it at a spot market. Okay, so that's basically in a nutshell what a future contract is buying something today for a later date. Okay, and usually futures contracts are done either through something that's tangible, like in this case I explained this with farmers, or it could be done through a financial instrument like Forex. And I'm going to go into that here in a little bit. So let me get rid of this screen here. Okay. Does anybody have any questions what a futures contract is? If so, let me know on the screen and I will answer as fast as I can. Okay, so let's look at the S&P 500. And then we're going to look at currencies here in a little bit. So looking at the S&P 500, what happened to my chart? Oh, there we go. Okay. So looking at the S&P 500 over here, and the markets are closed today, so we can't really see market movement, and I don't have any demo reel to show you past market of what happened in the past. So, but we can see the charts. Now, a technical analysis is a technical analysis whether it's done in the S&P 500 or whether it's done in Forex. That doesn't change much. But for example, in the S&P 500, I want to explain what that is. So it's an index where a lot of companies are being traded at one point. So you can actually leverage your money in a better way. Instead of buying stocks at $50,000 and hoping they go up, you can actually leverage that through a diverse bunch of stocks that go up and down. And you can do that, and you can determine what's going to be happening in the S&P 500 depending on what stocks are going up and what stocks are going down. Okay, so on a technical analysis, if you want to start doing a technical analysis on futures, it's very similar to what Rakeel and what Ted teaches you. We're looking for support and resistance. Fundamentals are very, very, very important. I saw somebody on the YouTube ask about the fundamentals are important for trading. Listen, fundamentals are super important for trading. It does affect the markets. It will affect the Forex market as well as it's going to affect the futures market as well as going to affect the spot markets. Okay, that's super, super important. When it comes to, for example, the pair of the euro dollar, okay, and the economy in the United States is doing so well like it is right now. Jobs are being increased. The market's going up like crazy. It's to the U.S. advantage to bring the dollar down because you want to bring the dollar down to be able to do more import and exports. So, because the cheaper it is to be able to do business in the United States, the easier it is for China, for Europe, and for other countries to be able to import and export the products. So that is super, super, super important. Okay, so that's what you have to look at. Let's look at the political sense of what's going on and so forth. So when you're trading futures, that's very important. Fundamentals are important to know what's happening because news events do spikes. If you look at the S&P 500, and we go back, this is a news event right here. Okay, and if you're thinking that you're going to be going short and you get caught in a position like right here, a news event can take you out in the futures contract. So the S&P 500, for every one contract that you are trading in the S&P 500, that's worth $129,000, guys. $129,000. That's why it's so critical that your money is leveraged properly. Okay, so I know in Forex you call them pigs. Okay, so here in the markets we call them ticks, which is each tick. If you see this as a ladder, and each price tick in the S&P 500 is worth $12.50 per one contract. So as you load up, you can see how very easy it is to make money or to lose money in the futures market. So it's very, very important that your trades are done properly. Now, what I teach and what the systems that we have implemented in our platform, we have systems to be able to average your price out and to be able to turn a bad trade into a good trade. And we can go over that in another day. I don't want to overwhelm you with a lot of information about futures. So what I want to do is I want to take this one step at a time. So on the S&P 500, each tick is $12.50, okay, per one contract that goes up or down. And each contract has a value of $129,000. So if you go over to the currencies, this is the euro dollar. Okay, I'm going to open up this chart right here. Okay, so this is the euro dollar on a 10-minute chart. Let's go to 60 minutes so you can see a little bit more. Okay, so this is the euro dollar futures. Okay, in this particular contract, okay, we're trading the March contract. So there's a code for each market that you would put into it. So I'm trading the March contract. So whatever happens, so this particular contract is going to expire in March. So I need to be able to liquidate my futures contract by March. What happens if I don't liquidate my futures contract by March? Okay. If I don't liquidate my futures my euro dollar futures contract, it says that per one contract that I buy, for example, at $1.20 versus the euro dollar, I'm just giving you an example, I'm going to commit to 125,000 euros. So if I let that futures contract expire, that means that in March, I'm going to be required to purchase the 125,000 euros. So in reality, the good thing about futures contracts is that you're leveraging your money, you're leveraging your trading so you can make money without actually spending that 125,000 euros that you're exchanging for dollars, if that makes any sense. Okay, but you have to be careful and not let that contract expire. I mean, that is very, very critical and important. Now, here's the cool thing. You guys are trading, a lot of you are trading Forex and want to get into futures, and I think that's awesome. So as an example, here in this move down here, let's say that you decided to go long and the market starts coming down. You can actually hedge it. Futures have been created to be able to hedge the spot markets. And a lot of people do that when they trade stocks and when they trade futures. So you can actually take a buy position in the euro dollar and take a sell position in the futures contract. Now, based on where the market's going, you can either close one or the other, and now you have more of a safety buffer in order for you to make money in that particular trade. So that's a big to me, it's a big plus. I hedge a lot. I use options. Options is a very different type of formula that we utilize, and I want to get into that. Maybe when we have like an options day, and we can go over options. I'm in options right now. I'm in three contracts. This is my live account, and I'm in three contracts. The market is closed, so you won't be able to see them in. But if you look at my account here, I have $100,282 in this account, and with the options that I've bought in the S&P 500, I've only risked about $2,700. I've already paid for those contracts, and now I'm just waiting for that move to happen. And I have X amount of time, so we can go over those in a little bit. Okay. Um, all right. So on the S&P 500, I want to let you know what I do, and I'm going to show you what a heat map looks like. Let's see the heat map. Okay, so this is the S&P 500 heat map. Okay, what does that mean? That means that these are all the companies that the S&P 500 and the index are being traded at that particular time. Okay, so you have Google, you have Oracle, you have Adobe, you have Microsoft, you have Amazon. The green means that the market's going up. The red means the market's coming down. Okay, so what I do is I analyze, and I want to see how my heat map is looking. Is it looking very red overall? Is it looking very green overall? Is it looking like right now? You see, it looks green and it looks red, and this is why the market is flat at this point. If you look at the S&P 500, let's go look at a 10-minute. This is why the market is pretty much not doing much. It's kind of flat. It's because you have like a red and you have a green, and it kind of pretty much match. So during when the market's open and you see these heat maps actually move, you'll have an idea of where the index is going, and you can actually trade in a much better uh, with better knowledge of what that trade's going to do and how that's going to play. Okay. All right. So on this particular index here, this is the Nasdaq. Let's go over here. This is the Nasdaq 100. So the Nasdaq 100 has technical companies as well. The really cool thing is the Nasdaq 100 really follows the S&P 500. So you have two different marketplaces, two different indexes that you can actually utilize and do trades on, and do technical analysis, and actually do two trades at one time that are actually going to go your way. For the most part, 90% of the time, the S&P follows the Nasdaq, or the Nasdaq follows the S&P, because the same companies that are in the Nasdaq are in the S&P. The S&P is a much larger index, so but a lot of the companies that are in the Nasdaq are in the S&P as well, and that's why one index follows the other. Okay. I think I showed you the wrong chart last time. This is the S&P. This is why it's flat, is because it's kind of green and so forth. But the technical analysis that you're learning from Rakeel and from Ted, like I said, are very similar, if not the same, when it comes to analyzing futures market and the futures chart. You just have to understand that your money is leveraged, and it can. So you're going to need a bigger account in order for to trade the futures. So, for example, the margin that's required is going to depend on the broker, but the margin that is required with futures is between $500 and $4,000, sometimes $6,000 per one contract, and that's going to depend on the broker that you use. Okay, um, so that's important there to know. to be able to have enough margin, to be able to trade these markets. Okay, so that's what a futures market is. Like I said, it's trading down the line, trading a price that's going to be like in March or in June or in August. Like I said, you can trade. I can trade this index all the way down to December. Here, right here, if you look at right here, this is the ES is the code for the S&P 500, and H means March. So if you look at the codes, I'm going to show you what the codes are. So January would be F, February would be G, March would be H, April would be J, May K, and so forth, right? We'll get into options on an option day because I really want to cover that in a different day that's a little bit more complex. But each month has a code. With that said, I can actually pull up the chart based on that code. So if you look at 20 means 2020, H would be March, and that's the S&P, that's the NASDAQ, and ZN is the 10-year bonds. So I trade 10-year bonds as well. So if you want to look at that market, this is the 10-year bonds, okay? If you want to look at other markets like commodities, here's the gold market, and here is the crude oil market. And if you look at the gold market, we're trading February. See, gold market G20. That's where most liquidity is in this future market. So I'm trading the February contract in gold. Now, I know that you guys, because I know Ted loves gold, he's an expert in gold. And I know you guys like to trade gold and like to analyze gold, which I think is awesome. But one thing to know about precious metals and commodities, when you trade the financial markets and when you trade these indexes, when big institutions are trading the S&P 500, and we're going to compare these right now, okay? If you look at over here, let me open up this chart a little bit more. The S&P 500, let's go back to 60 minutes. Okay, well, I want to show you a move. Okay, let's look at this move on January 12th. See how it's coming down? So something must have happened, or it's probably just a smaller move. But the big institutions, what's happening is they're taking money out of the financial markets, out of the companies. They're liquidating that. And then what happens usually when this gets liquidated, people or institutions start buying precious metals to offset their sales. So usually, and this is not an exact science, so it doesn't really happen like this all the time. But usually when you have a move down like this, then you have a move up in gold. And let's take a look at, this is January 12th. So let's look at gold at January 12th and see what happened there. This is 117, 116. Let's go to 60 minutes. And 60 days. Okay. And now we can look at this back. 12 and 12. Yeah, in this case, the gold came down as well. It didn't come down that drastically, but it did come down on January 12th as well. But for the most part, when you do have an index that they're liquidating heavily, and this usually happens when the liquidation is really heavy on an index, then the gold on the future side, anyways, then the gold or any precious metals will go up because that's where they're putting their money. Like I said, it doesn't happen all the time. This is not an exact science. But when you're looking at one market that's doing one thing, and when you're doing the other market that's doing the opposite thing, take advantage of that because the momentum is going to be there at that particular time. Okay. All right. Yes, I'm sorry about that, guys. That is the fan in my computer, and that it creates that. I've tried to turn that off, and it just doesn't turn off. I have a lot of stuff moving, so it does sound like an airplane, like an airport. I'll try and fix that for future webinars. So that's not there. So I apologize for that. But that's pretty much what futures is. And the really cool thing is about it is you can find pairs. I have currencies here. So I have like the euro dollar. This is the euro dollar pair, like I showed you. We have the pound dollar. You get the Canadian dollar and the Japanese dollar. So let's look at the Canadian dollar versus the US dollar. And again, we're trading the March contract right here. And you can do the same analytical stuff that Rakeel and Ted teaches you, and you can actually trade these markets. Just know that you will need a little bit more liquid cash in order to be able to put these trades on. Now, here's a really cool thing that started actually last year. Last year, um, the CME, which is the Chicago Mercantile Exchange, came out with a product called micro markets. Okay, like I told you, before, the S&P 500, each contract is worth $129,000, and each tick up the ladder is worth $12.50. Well, the micro markets have made it more accessible to people, so they don't have to have that much money inside the in a broker. So the micro markets, what it's done is it's cut the contract by 1/10. So now when you trade one contract in the micro market, which is the S&P 500 and the Nasdaq, this is what they have right now. I think the Russell as well. So now each contract is worth $12,900. So what does that mean? Instead of each tick being $12.50 per contract, now each tick is worth $1.25 per contract. So yes, you'll make less money, but you'll also lose less money if that's the case. You're risking a lot less, and you're still in the market. So that means that you can open up a futures account with, you don't have to put in, 20,000, 30,000. Now you can put in $5,000 in a futures account and actually trade the micro markets, and you should be 100% fine. Now, the the actual margin for the micro market is going to depend on your broker, and this at this point is going to be between $50 and $300 per contract versus the $500 to $3,000 per contract. So this is a cool product, and this is how I started my son trading. I told him that he needs to start with micro markets because the money at risk is less, so your emotion and your psyche works better, and you can train better to understand what the movement of the market does before you get into the bigger contract, which is going to be more emotional because there's a lot more money at risk. Okay. Um, so that's kind of like what a futures contract is. That's what it is about trading futures. Futures is all about hedging, hedging, right? If you guys know who Southwest Airlines here in the United States, they hedge their fuel for many years with futures contracts. So if you guys remember back in 2010, I believe, or 2009, when the fuel prices were through the roof and all the airlines were hurting because all the fuel costs and all the big news back then, um, because Southwest Airlines, they had hundreds of thousands, if not millions of dollars worth of futures contracts um, in actually crude oil. They hedged their purchases in fuel, and they were able to run a more efficient airline with cheaper costs. So futures is about hedging. Okay, so if I have any questions right now, I'm going to open up the room for some questions. If anybody wants to ask any questions, and like I said, I don't want to go into a lot of depth right the first day because this could be just a lot of information, and you can just not completely understand anything. So I want to do baby steps and kind of go over that. So I assume that because you guys have been on here for quite a while, you understand what a support and resistance. So I'm not going to go over those topics unless you want me to. If you want me to, I'll go over that. Yes, I do have a YouTube channel. It's Pilot Traders. If you go to pilottraders.com, you'll see my Instagram, Facebook, and YouTube channel. They're brand new, so content is being put on there, and I'll be putting on content on there more as time goes by. So the idea of our YouTube channel and Facebook channel is we're going to be trading live off of my live account. It's going to be my son and I, and we're going to be flying our airplane. We're also pilots, so we'll be flying our airplane all over the United States, Mexico, and Central America, and we'll be reaching different cities, and we'll be flying, and we'll be hosting live events at some point, and you guys will be invited to that. So it's just going to take some time to build that up, but this year is what's going to happen. I'm looking at about February, March to start those live events to start happening. So you guys will be welcome to come to those, and you'll see us trade live there as well. We'll be doing also channels and teachings in Spanish for those of you who just want to do it in Spanish, and we're fluent in Spanish, so we can do that as well. So we'll do those special webinars and those live events in Spanish as we go.
What's the best in class platform for service? I see it with zero commissions on online trades. I like what you're seeing. Beautiful. TD Ameritrade now offers zero commissions on online trades.
I don't know what happened. So, okay, so I got a couple questions here I want to answer.
I practically from the accounting principle.
Oh boy, I got this one here. Okay. Over here. All right, so the question I'm getting is, yes, Chris, futures are manipulated by large institutions. They're called market movers, and they can put in quite a bit of contract sizes, and you'll see futures move for that. So institutions can move the markets if they have the cash to do so. Okay, so that's another thing that you need to look, and that's why I say when big institutions come in and they start liquidating those markets, you'll start seeing precious metals go the opposite way because they're liquidating one and they're putting money in the other. So that is definitely that definitely happens, and that's why it's important to be careful when it comes to the futures trading. So yes, it for sure happens. Guys, I apologize about the fan in my computer. I'll make sure that gets taken care of and that doesn't happen next time. But so going through some of these questions, what is the difference between future contract and FX contract? So a futures contract is what I told you. It is what it is, whether it's a futures Forex contract or whether it's a futures S&P contract. The difference is the exchange that handles it. NADEX is the one that handles the currencies futures contracts. The Chicago Mercantile Exchange is the one that handles the S&P 500, the NASDAQ 500, and so forth. But really, a futures contract is a futures contract. Just have to be careful not to let them expire. And if you're going to trade, get in and get out. I usually, unless I'm 100% sure and I'm really, really sure of my trade, I don't really leave my trade on overnight. I usually I'm in and out unless I've been in such a good position that I have a trading stop on it. And then I just let that trade move forward on me and make me money. But if it's a trade that I'm not too comfortable with and I could lose money on, I don't leave it overnight. So I do liquidate my futures contract that same day. Sometimes I'll take 3 or 4 days before I liquidate them, but I have to be careful, and I'm very mindful and I'm very watchful on when those contracts expire. Okay, that's very important. How long do I trade a day? I never overtrade. Overtrading is always an issue. I have my limits, and I'm sure that Rakeel and Ted has taught you this as well. I have my losing limits. If I lose X amount of money a day, I don't continue trading. If I make X amount of money a day, I don't continue trading. But if I have a trade that keeps making me money and I have a trading stop and I have zero risk on it, I'll just let that move forward. But I usually trade 2 to 3 hours a day, 4 hours max. And if the markets are not moving, I just close them up and leave. I don't let that emotion of I have to trade, I have to trade, I have to trade kick in. You know, sometimes I say that no trading day is a good trading day because of the markets that you're looking at, whether it be the pair in Forex that you're looking at, or whether it be crude oil or the S&P 500, it may not be what you want to trade that particular day. So I don't overtrade. I try not to anyways. Thomas Rodriguez, you're asking me if I know Alfonso Moreno. I don't know who he is. So so I look at the daily candle, and this is for think different. I look at the daily candle, but I do trade off the 30-minute and off the 10-minute. That's where I trade off of. I look at the 4 hours, I look at the 60-minute, I look at the daily, um, and that's where I make my decisions. Yes, those indicators that I utilize in those charts that you see here are the ones that I use daily. This is the Bollinger. These are I have two simple moving averages. This right up here is a resistance indicator, and this is a support indicator. And this resistance and support is based off of 15 days, okay? Now, nevertheless, I have resistance and support indicators. I do utilize my indicators that I'm seeing within the candles, okay? So those indicators are important as well. So when I see like a support right here or a support right here, I do look at that as well as I'm looking at what this support is here. So for example, for the most part, sometimes on a daily trade, the support, the market does not go beyond this or it goes beyond that. So this kind of gives me a range of where I know the market's going to be. Again, it's not a 90% true. It could actually go through this support. It can actually touch through that resistance. But I do look at what the market's doing. Like for example, from here to here, I do use Fibonacci's and I see what the range is. So this is the range I would trade. I would average my price out within this range to be able to make money on 2 to 3 trades from here to here. So those are strategies that we can go over another day. But just want to give you an introductory on futures and what the market and what my charts look like. This platform here, you guys will also be able to be on it, and we can go over that as well, and I can teach you how to use this platform. So the question is, I'm trying to read some of your questions right now. There's no gap in stock chart, and the stock once the stocks are moving, that's when these indexes are moving. There's no gap in those movements. They're pretty much almost instant. No, black box trading. Do not let the futures, unless you want to buy the product, but don't let them expire. Do not let them expire. It will cost you more money because what you're doing with the futures contract is you're leveraging that contract. So as an example, on the S&P 500, that contract is worth $129,000 per one contract, okay, on the indexes, and it's separate, and that money is actually divided into all the companies within that index. So if you buy a contract into the futures market, okay, and you buy it at, for example, the price right here is 24.75. That's 3,324.75. Okay, that's the price point per one contract. But you're buying on the E-mini, you're buying a portion of that contract. So if you let this expire, you will be required to pay that excess amount of money. So that's not a strategy that I would recommend. Do not let them expire. Actually move forward. On options, on the other hand, there is a strategy where you can let the options expire within the futures contract, and I can go over that in another day. But that is a strategy for options only, not for the futures contract. I use the DOM. Thomas Rodriguez, I use the ladder or the DOM just to see where my orders are at and see differences, but I usually trade off the chart. So within this platform here, you can actually be trading within the chart. I can put an order here and move my orders where the support and the resistance is at. So I can move here and use this, but I use the DOM to watch my orders and watch my price action as it's happening. but I don't really use it to trade. I use my chart to trade. And with this platform, you can actually initiate orders, move orders within the platform. As a matter of fact, I'm going to show you that today. This is my live account, so I'm going to log out of it. And I'm going to log in. Oops. I'm going to log in into my demo account. And I'm going to show you guys how the orders are made. Okay, that's a good question, Mark. When do you move? So you cannot move your orders from one contract to another. So if you have a contract in the March contract, you need to finalize that contract, and then you need to go into the next contract and put another order in there. So you can't take that same order and move it to the following contract. It's got to be finalized. You have to finalize it, okay? And yes, I do swing trade and I do scalp. As a matter of fact, that's a great question. And we have a tool here that actually scalps the market for you as you watch it. So yes, we do that as well. I do that as well. And that is really, we call it the adaptive swing trader. And what that tool does, it's an automated tool. It will take the support and the resistance. And once the market gets here and it starts losing volume, it'll put a sell order. It'll come down here, then it'll put a buy order. Then it'll put it right here. And then it'll put a sell order up here and so forth. You just watch it. It will fill you up with contracts, but it'll make you money because it's scalping as the candles are coming up and down. So we have a tool that does that. Now this is my demo account within this platform, and I've changed from my live demo so I can show you a couple of things. So let's say that I want to put an order today in this chart. Okay, it's easy as this is my systems trading here. My buy button here is green. As soon as I put my cursor over the chart, you'll see a BA, which is called buying action. I click it, and here's my order. Okay, now I can take my order, and now I can move this within the chart. So it's pretty cool. So let's say I want to buy at the support right here. If you look at the support right here, and I want to put my order at this buy area, I can do that, and I can wait for the market to pick it up. So obviously that's a limit order because that was the mode it was. But if I want to put a market order, I can do that as well. Click buy, and boom, now I'm in the market. But the market's closed, so it's not allowing me to do that. But that's the cool part about this platform. You can actually put an order in, and you can move it around based on where the market's moving. Like right here is support. I put it here, wait till the market pick me up. This candle come down, pick me up, I will be in the market. So that's how I usually do my trades. And the adaptive swing trader that I was telling you about, you'll see a whole bunch of these orders coming in and out as these candles are going up and down. And that's in here. It's called the adaptive swing trader. And if we put it up, we set it up here based on how I want to do it, the intervals of the charts, the symbol, the market that I want, and so forth. But I'll show you how to do this on a different day. But yes, we do scalp the market for sure. So usually when you get into about mid-March, okay, so about the first week and the second week of actual March, that's when the volume starts dying out within the March contract, and then you move into the June contract right away. Sometimes once I hit the first day of March, I start looking at June right away, and I start seeing what the volume is there. So I'll start monitoring that volume. And so I might switch earlier than the second week, depending on what the volume is doing, or might switch a little bit later, depending on what the volume is doing. But yeah, once we hit the first day in that particular March, I will start looking at June. But usually it's about mid-March when you start switching. Curtis C. Robinson, yes, there's a time decay on options. So options have a monetary value and they have a time value. So when you do options, I'm looking at the market as an example, right? I have 3 contracts on the S&P 500. So this is one. So this is the S&P 500. So I have 3 puts. The put means that I want the market to come down. So I'm seeing, if you look at right here, how the market is kind of the volume, the strength, the momentum is dying on the up a little bit on the S&P 500 for now. And if we look at the daily chart, this is a daily chart on the S&P 500. If I draw a line, I can draw a line here, from here to about, from here to about here, right? If you look at that, I have a higher high, you got a dip, a dip, a dip. I'm expecting a dip to about right here. So what I've done by looking at what the S&P 500, by seeing that it's kind of running out of steam a little bit, let's go back to a 30-minute, and I'm seeing it's running out of steam just a bit. As you look at the volume, I'm expecting a dip in the S&P 500 to about 3280, about right here. Okay, I'm expecting the market to start doing that in the next week or two. So I bought options 2 weeks out. They're going to expire at the end of this month. Okay, and the option about is a put. A put means that I want the market to go down. So as long as the market comes down to about right here, I'll make about 6, 7, 8 grand on these 3 contracts. I will be happy, and I'll exit those options. But what I've done is I've created a spread strategy where I've actually bought 3 contracts a put, and what that means is I buy the contract for it to come down, and then I sell at a different price point 2 of the contracts, just in case the market goes against me. Those 2 contracts is going to offset my sell strategy, so I won't lose as much money. So that's what I have right now in place, and I'm waiting for this next week for the S&P to actually get down to about 3290, 3280. Janara Chang, absolutely. The platform is available right now to download. You can get you can demo it. You can get some demo information, and I think you have like 2-3 weeks to demo it. And yeah, you can absolutely download it. Absolutely. No, in options trading, you get the full amount of the contract. It's the same amount. The difference with the options market is it moves different from the underlying market. So, for example, the liquidity in options is not as much as the actual market. So it moves different. So if I choose the strike price, like for example, when I bought an option to come down, the market right now is at 33.23. The strike price that I purchased my option at is at 33.10. What does that mean? That means that if the market gets to 33.10, which is about right here, okay, it means that my option is in the money. In the money being that my option is valued at the actual price that I've purchased it at. Okay, so if I let so the market keeps coming down here, okay, I will make my 12.50 per tick as the option comes down, right? And there's a premium price on this particular options. So what happens if I let that option expire? Then the option is going to turn into a future contract at 33.10. Now in that case, my futures contract will turn into a 33.10 futures contract, and from here to here, I can make a lot more money than if I just leave the option as is. But because the option moves very close to what the liquidity in the option, once it hits the strike price, is very similar to the movement in the market. Sometimes it's not worth to let those options expire, because the amount of money that you would make on closing that option is very similar to the amount of money that you would make by letting that expire and turning that into an options contract. But some people do that. That is a strategy depending on the situation and depending on the liquidity. Okay. I don't know. I understand what a binary option is and what binary is. Binary is just a different market. An option's an option, and they all work the same. But if you do a binary option, that means that you're just doing an option in the binary market. Yes, Gennaro Chang, I will share that link with you. Um, so if you actually go, I'll share. You know what? I'm going to share that link on my Facebook. So if you go to Pilot Traders, look for Pilot Traders on Facebook. I'm going to share that link of where you can download the software on the Facebook. As soon as I'm done with this webinar, I'll show you guys there where you can download it. Okay. Um, So I think that for today, we've covered quite a bit. When we start trading live, you'll understand a lot of what I'm talking about because I'll be doing it as I'm explaining it. And when we start traveling to all these different cities and we start meeting up in these live events, you'll understand a little bit more as well. As I start talking about it more, as you start seeing it, you'll see. As you start seeing the options move, as I'm trading live, like I said, I have 3 options currently now, but because the market is closed, you can't really see them move until they're open. So once the market opens up, I can pull them up and you'll be able to see it because options do not show up on the actual chart. They're on the dome ladder, and you'll see them there. But that's where you'll be able to see it. So with that, Rakeel, if you're on, I'll end my session today, and we'll go over more things slowly as time progresses. But I definitely appreciate Rakeel inviting me on today, and I appreciate you guys. Please follow me on Facebook, on Instagram, and on YouTube as I'll be posting lots of videos. I'll be going live, and I'll be joining Rakeel and Ted and some of these maybe once or twice a week. I think we'll be talking about it as we can. So, but Rakeel, thanks so much for everything, man. I really appreciate it. I hope that this was informative for you guys. If you have questions, feel free to do so on Facebook. I'll probably answer better there, and on Instagram, and I'll be happy to answer those questions for you. Thanks,
Awesome.
guys. Appreciate it. Have a great weekend.
Awesome, David. Thank you so much. So take care, guys. Have fun. We'll see you Monday.